Big gains ahead for silver. If we listen to the professional analyst community, that's what we have in store, with one of them even calling for silver prices as high as $50. But it gets even more interesting when we consider that one of the big banks, Citigroup, they also have a very encouraging forecast for the price of silver. You want to hear about it? Let's talk about it right now. How do you like to hear the phrase near perfect conditions to describe the environment that the silver price is heading into? That's just what the analysts at Citigroup are saying. The only thing I can think of more perfect is the fact that you've decided to join me here today. I will give you a video every day for the rest of my life. Depending on who lives longer, you could be with me every single day. Please give this video a thumbs up and subscribe. It's free. Let's talk about the analyst team at Citigroup. They're headed up by a guy named Maximilian Layton. He told a Forbes writer that the U.S. dollar still has room to weaken. Layton and the Citi analyst stated that, quote, precious metals and especially silver have near perfect conditions for an ongoing bull market. They also projected that the silver price could increase to almost $30 per ounce in the coming months. You like the sound of $30 silver, you're going to like the sound of $50 silver even better. And we're going to cover that in a little bit. But recently, our friends at Citigroup, they updated their call for $30 silver when they said this: we think the recent price weakness offers a strong dip buying opportunity, reiterating our call for $30 silver over the next 6 to 12 months. We know it's been painful to be in silver over the last few weeks. It seemed like we were trying to break out above $26, $27, and then boom, we got smashed right back down to $23. But listen to what Citi says. We expect silver would rally in anticipation of a fall in U.S. interest rates and real yields. That will likely accompany an anticipated rollover in U.S. growth in Q4 of 2023 or early 2024. This should weigh on the dollar, with Citi economists expecting U.S. rates and the dollar to weaken further. The DXY index to 96. Guys, we've talked about this ad nauseum. The biggest thing that's weighing on silver and gold prices, for that matter, recently is a quote-unquote strong dollar, which is a bunch of malarkey because the DXY is just comparing the dollar to a bunch of currencies, the euro and the yen, that are in worse shape than the United States. Citigroup also anticipates that we'll have some new friends, some new investors joining us on the silver boat. They say this should underpin ETF demand for silver. Weaker competition for investment capital from other asset classes should also support silver pricing as markets increasingly price a U.S. recession. I just thought of something astounding, and I want to share it with you. We all know that story. Only 0.5% of the world's investable capital is in precious metals. And if that goes up to 2 or 3%, that's like 4 or 6 times more money in the sector. But the astounding part is if you take a step back and think about that's gold and silver combined. Silver's just a sliver of that sliver. The silver market could really blow up. And heck, we know the inventories at the big electronic exchanges, the LBMA in London, England, and the COMEX here in the United States, they have like near all-time low or possibly all-time low inventories of physical metal in their warehouses. That just hit me, right? I never considered that of that little sliver of money that's invested in precious metals and in the precious metal stocks as well, just a tiny segment of that tiny segment is silver. And little tiny things like that can grow exponentially with just a marginal increase in funds moving into the sector. The last thing we'll say about Citi is that over a 12-month period, they actually forecast silver price going as high as $34 per ounce. But we have even more friends, two other analysts who are making lofty predictions for silver, one of which saying $50 is not out of the cards. First, we'll talk about Janie Simpson. She's the managing director at ABC Bullion. She also shares an optimistic outlook for $30 silver, saying, quote, silver has historically delivered gains of close to 20% per annum in years that inflation is high. Given that track record and how cheap silver remains relative to gold, it wouldn't surprise to see it head towards $30 per ounce this year. Though that will likely offer significant resistance. She said that on CNBC. Now let's move on to our $50 silver friend. FX Empire analyst Christopher Lewis has this to say. Silver continues to threaten resistance. On the upside, if we were to take out the recent high, we could go looking for the $27 level. Now wait, I said something to you about $50, didn't I? Hold on. Because he went on to say, quote, if we take that out, then it's possible that we may enter a phase where the silver market takes off like it did a couple of times in the past, trying to get all the way to the $50 level. Hey, I understand. $50 silver, it seems preposterous, but we need to remember it's happened several times in the past. Heck, just back in 2011, the last time we had a debt ceiling crisis, silver hit $48. In today's dollars, that would probably be more like $70 per ounce. So it is absolutely possible. And you want to consider some other factors as well, like supply and demand. There is way more silver being demanded every single year. Did you know that? Than the mines are able to supply. Heck, last year alone, it was over 200 million ounces of shortfall supplied by the mines. And this year, it's projected to get even worse. Mines are not able to supply all the silver being demanded in the world from investors, from industry. Just solar alone is projected to consume tons and tons of more silver every year as we head into the future. Thanks for joining me here in the basement. Go watch a live stream.
Listen.
Hey everybody, it's Ron from Ron's Basement, live on the log flume. Say hi, girls.
Hi.